to this computer. All right, so I'm recording this call, y'all. So yeah, let me see. Drop them ones in this chat. Oh yeah, we getting some good ones in there. That's what I like to see, y'all. Thank you, thank you. Let me share my screen. Let us go. So yeah. So what I like to do, you guys, especially with this pair U30, US 30, that's called the Dow Jones Index, you guys. So, US 30 is the 30 major companies in the US, such as Pepsi, Coke, you know, companies such as that, In this pair, it's a very volatile pair, right now, as you guys can see, this pair, the market has honestly just been going in a sideways trend. This is, we call this, basically say it's been ranging or consolidating. It's been consolidating between these levels right here, these black lines that I have. These are my QP levels. QP levels are quarter point levels. I have these marked off at every 250. So I have it at basically 28,000. Then I have this one at 27,750, 27,500, so and so on and so forth. And basically these are points that for some reason this pair likes to respect. The market likes to respect these points. And this is where you're able to you're basically able to use these points as support and resistance and also take profit areas. So basically how I was able to catch a nice trade on US 30 today and yesterday. Right now, I will show you guys, but I'm in profit right now, blue screens, something light, very small lot size. I don't even have to trade big, you guys. I don't have to use 0.0, 0.10s, nothing like that. Now, I'm gonna be honest, this early started off at 100, it shot up to $150. It just came and retraced back down, but I'm still holding the trade because I know that the market is gonna push this trade further down. It's gonna break this low. And if it doesn't, then I'll get out. But I'll wait until the market actually shows me signs of it actually retracing. Let me see. So let me show you guys some trades. Let me show you guys how I got into a couple of setups. Well, let's start off right here. Shout out Andrew. Definitely, I've been studying a lot with the ICT. The ICT, the institutional trading style, which is basically watching for the market patterns when you see a sudden breakout or an opposite trend in the direction of the market, but it was just a sudden move. And you know that when you look at the recent candles, you notice that they don't have as much volume in them. So that means that it's not a lot of money that's being pushed into these candles to make it go in that direction. But then when you see just a freakishly large push, that means a lot of money was used to just make this market go in the opposite direction. And right here, if you notice right here on the 1 hour time frame, the market was creating a downtrend. It was creating staircases. And then it created a sudden push up right here. That push up went a little bit above this high. That's a fake out. And then notice how the market used all the money. They used a lot of money to push the market back down to correct the trend. That's an institutional move. How I was able to catch this sell from the tippity top was off of this by using my Fibonacci retracement tool by going into this section over here, selecting the Fib retracement, dragging it from this candle, from the high of the candle to the low of the candle and pulling out using my green line and dragging it to the 50% line. And I'll zoom in for you. And I'll zoom in for you guys so you got to see it a little better. 50% line, perfect touch. And with US 30, from right there, you would have 19 pips of drawdown, 20 pips of drawdown. With a small lot size, that can be $22. But you would be in profit 186 pips. But you would have seen 280, 290 if you would have held it all the way to the end before it retraced. That could have been $300, 320, and that's with the smallest lot size. And you could have made this inside of 3 hours. Not too many pairs that you actually are able to trade give you this this amount that you can actually make in a certain amount of time. So I really like this pair just because it does give you some quick moves. But for people that don't like to be too risky, or people that are still learning the institutional way of trading, I have another strategy that I use just because this is how I like to look at the market when it comes to being safe and having confirmation that the market is going to continue in the direction that I want to go in. This is called confluence. So one thing you guys notice that I have this purple box marked off right here. And the reason why I have this purple box marked off is because right here, I noticed that this is something I've just noticed by really studying the market in the last month. It's something really new that I've been peeping. Where you notice in the market, either on a higher time frame or sometimes on a lower time frame, you can see it you'll see it a lot of times. But let's stick to this one. My bad, you guys. But yeah, you'll see it on time frames like this. And when you see this right here, I noticed that this usually causes a reversal. Somehow, some way, the market likes to reverse when it starts to have it has candle formations like this. And it can either be a sell to buy candle or a buy to sell candle. So notice these, I have this highlighted. The market continues its downtrend and retraces back. It rejects this area, this zone, continues this downtrend, shoots above. This right here is a fake out. This fake out move was because the market had to retrace and come back and respect this institutional move over here. Then, my bad, you guys. Then the market corrected itself and continued the downtrend. But one thing that I did notice that on the 1 hour, the market did not create a bearish engulf. A bearish engulf is basically when the market gives you a seller's candle that engulfs the buyer's candle or the previous candle. Let's see on the 4 hour. On the 4 hour, we noticed that was just a long wick. But right here, this is technically a bearish engulf because it did engulf this candle, but it's not really, we don't really see good market structure here. So we're not going to consider it off this time frame. So what we do is we go drop a time frame to get a clear description and a clearer view of what the market's actually telling us. And we want to figure out and see if we can find market structure, which is creating lower highs, lower lows, lower highs and lower lows, and then so on forth on an uptrend, which is higher lows, higher highs, higher lows, higher highs, higher lows, higher highs. So right here, I noticed the market didn't engulf. So let's drop to the 30-minute. In the 30-minute time frame, we do notice that we do have a bearish engulf. So this is a key factor that one, it came back to one, respect this institutional move. But if you don't know institutional trading yet, it's okay. This is something that you'll learn still. But if you notice that this is just confluence though. One, it came back and respected the institutional move. Two, this is a bearish engulf. That bearish engulf candle lets me know that, oh my bad, you guys. I haven't been paying attention to the chat. I'm gonna answer some questions in 1 second. Note then this bearish engulf candle, I noticed the market continues to sell. It creates, it goes into a small retracement, as we'll notice on the 15. It's very small. So it engulfs this buyer's candle and creates a seller's candle that engulfs, which continues the downtrend. Now, once I noticed that, first of all, it broke this low. Once this breaks this low, we need to see a clear retest for a continuation. And that gives us confirmation. Clear retest. And it continues the downtrend, as we see right there. Then, this would have been my entry. Well, this was my entry, actually. My entry was once it broke this low and came back for the retest. That's how I usually get my entries for most of my sales. But then also, this would have been a good entry too, because it was consolidating for a while. So this would have been an even better entry, just for more confirmation. Because right here, it did consolidate. We're on the 15. This 30-minute. It did make this small retest on the 30 and the 1 hour, on the 30 and the 15. So I would have waited just a little bit longer, but I gambled, not really gambled. I just kind of knew it was going to continue the downtrend just off the volume and off the institutional move, because I already had an entry up here. So, and my take profit is down there because it's pretty low. Because it already filled that gap. Actually, it did recently fill the gap over here. So I just had a feeling that US 30 had it needed to drop. So I've been waiting on that. Let me see. Let me read the cat. Let me read some of the chat real quick. Yeah, that smart money stuff is crazy, bro. Why do you zoom? Why do you do the 50% of the candle? I did the 50% of the candle because that's just something that I was actually taught. That's something I learned from actually watching some videos, watching videos from Andrew. If you actually go into our Discord section, into the experience training course section, Andrew has a couple videos about his institutional trading too, and they actually teach us about zooming into the 50% of the candle, using your Fibonacci retracement tool on the 50% of the candle once you notice that it's a fake out move, basically because it just allows you to get a range of when the market makes a retracement for you to get a good entry. It's just something that somebody was able to study over time, and it's their strategy. Can I explain why I highlighted that zone? All right. Let me see. Oh, I think I did explain why I highlighted this zone. I highlighted this zone. Yeah. I did explain why I highlighted the zone. I highlighted this zone because I noticed that over time, that in the past, that when the market makes either a sell to buy candle or a buy to sell candle, then it follows up, continuing the trend that it was already previously in, that the market will soon come back and retrace to that zone, respect it, and then reverse. So that's just something that I noticed. Yeah. So let's see what US 30. Yeah, US 30's kind of just been bouncing around. playing around in this zone for a while. It's honestly been respecting this QP level. Right now, I still have not seen a bearish engulf. Let me see. Yeah, even on a 4 hour, I still haven't seen a bearish engulf. So it has not given me enough signs to actually pull out of my trade yet. So when I start to see some formations of more buyers actually getting into the play, well, I see a bullish engulf right here, but that bullish engulf is only on a 1 hour. I still need to see more. It's just not enough. This is going in a sideways trend. So usually when it's going in a sideways trend, you can actually just either zone it off. Let's see. Yeah, I can zone it off like this. All right. So the reason why I put my zones right here too is because let me see. Nah, let me do it like this. Yeah, let me do it like this. All right, so the reason why I have my little box and zone marked off like this is because I usually like to put my resistance at when the buyer, if it's going in an uptrend and the buyers respect a level of price and it resists this level of price, I usually like to mark that area off. And usually for my support, it's usually the common area where you see the most touches, and that allows me to know where it's a good support area. But yeah, US 30 is definitely a very, very good trade. I mean, a very, very good pair to get into. If you guys study it, the main thing to study about US 30 is just break and retest, watching it for break and retest. I'll show you guys another little way you could have caught some pairs where you can cause some moves on US 30 too. Uh, let's see a buy move, right? Let's go right here. So if you notice right here, you could have caught a buy move right here, right? Because it was on the QP level. One, the market just straight shot down, you know? And if you notice over here, last time the market straight shot up, it consolidated for a while before it actually made a real direction for which way it was going to go. But you notice that it was going into a slight downtrending motion direction. So what you could have anticipated here was that the market might do the same if it didn't break this low over here, which it didn't. And the reason why I have this area marked off is I just have the lows marked off, basically the wicks from the candle bodies to the wicks, just basically the median. But right here, if you would have went down to the 30-minute and paid attention to how the market slowed down once it got to this QP, this quarter point level. In the 30 minutes, if you notice, my own strategy is in usually the first 30 minutes or the first 15 minutes of the hour, it's just, I'm gonna be honest, it's just my strategy. Every time frame that you look at, the first half of it is gonna go the opposite direction of the way that the market is gonna go. So if I'm looking at it on the 30-minute time frame, the first 15 minutes time frame, if I wanted to go on an uptrend, the first 15 minutes is going to go downwards before it goes upwards. That creates the wick. And when it creates that wick, that actually just allows you to know that the market's going to continue to push up, and that's just something that I just got. That's something I just was able to pay attention to. It's a little my little trick, my little strategy. So if you notice right here, I'll show you again, the market pushed down at first and then jumped up. Watch this. See how it pushed down and then jumped up? It created that wick. Then it created, and we're on a 30-minute time frame, so that was a 15-minute. That was the first 15 minutes. Then it pushed up. It engulfed this candle right here. This lets me know the buyer's in the play. I don't know how far the buyers are going to be in play, but I know the buyer's in play. But one thing I do know that is the market does have to come back up to this level at least, but really it has to come back up to this level because this is, I believe this is called mitigation. I have to study it a little bit more, but I just know that the market has to come back and retest the area that it broke. Simple as that. That's just common. That's just something that you'll learn over time when you study it. That's not over time. When you actually study it, the market has to come back and it has to come back and retest the lows that it broke. So the market didn't come back and retest any lows. So let's just watch it play out. This is how I caught my entry. Once the market would have shot up, it would have created its resistance level. It would have came down to actually, it would have came down to retest this low. Not even that low. It would have created a low. Let me show you guys in a second. So the market would have came back and retested that low, which would have allowed you to know that the market was going to continue its uptrend. If the market continued to test that, if the market would have retested that low and showed you a bullish engulf, that would have gave you some signs that the market was going to continue its uptrend. The first sign that it gave us this bullish engulf was right here, but it didn't retest this low yet. Let's see. Then it continues up. So the reason why I did that was because the bullish engulf happened at a lower point in time, but then it also came once it actually shot above these highs. It's crazy sometimes how when you look at a smaller time frame and if you actually just can catch good wick entries, how you can just excel and not deal with any drawdown whatsoever. So you could have had a 1 pip drawdown, if anything. You could have played it safe. Let's say, waited for it to come back and retest this high right here. Let's see, you could have dropped time frames even more. And you could have seen the retest. This high came, jumped up, finally broke right here. And this is for people that scalp. Scalping is people that like to get in quick entries, really look at the market detail. The market broke this resistance level. This is your seller's candle that came down and retested it. Then the market continued to push up. How much drawdown you would have had? 2 pips. How much you would have been in profit from this entry? 45 minutes, you would have been at 44 pips. That's good money. But let's see how high it really goes. Good money. That's good money. And U30 does like to come play with you and retest sometimes, I'm gonna be honest with you. So you kind of just gotta have a good stomach and a good gut to just hold that. But U30 went for 217. That's good money if you know how to trade US 30. Great money. Exactly, for sure. So let me show you guys. I trade GJ too. This is a pair I like to trade you guys too. This is how I caught a buy move on GJ. Let me see here quick. So how I caught this buy move on GJ right here was I noticed that on the 4 hour, let me see. So I have this zone area marked off because this is where you see that move that I was telling you guys about on the weekly, where it's a buy to sell candle, and then it continues the buy move. So I have this zone boxed off because this is where you'll see a reversal, because you see the market fakes like it's gonna give us some resistance and wants to reject this high and push down. So it gives us a reversal to let us know that the market is going to continue to push up for the buy. And the way you could have capitalized off this was you could have been a zone trader and, waited for it to break the zone, then give a nice retest of the zone, and then give you buy confirmation for it to get in, which you could have got in right here. And, I'll show you guys how you guys could have got in there too. I wouldn't have got in there. Just, I wait for more. I would have needed more confirmation, but I'll show you guys how you guys could have got in. It's the daily too. So the way you could have got in was just simply off of breaking a breaking structure and a retest. The market broke right here. It came down and retested. Then it continued to retest a little bit, gave you a nice doji candle. A doji candle is a real indecision candle. It allows you to it lets you know the market has no direction for real. It's just the market basically closed in the middle. Then it closed in a buyer's candle and continued to push up. But then if we drop time frames, I'm sure we can get a better view of what really was going on. And what really was going on was right here, where the market is just continuing to make higher highs and higher lows, but it made a little, let's see, it made a flag. And the market ended up breaking out of this zone and giving it a nice retest, which you could have got in off this break and retest right here. Bam. That could have been your entry. Sniper entry. I'm talking super sniper. What type of drawdown? Where's the drawdown? Please tell me, you guys. Where? We would have instantly shot up. Let's see. Just from that entry, you would have instantly went up 19 pips. And let's see. Look at that. Strictly zone to zone trading. And that's just if y'all really wanted that super, super sniper. Super sniper. It'll took you 14 hours to see 90 pips. That's cool. I'd hold that all day long. Just because I know if I use good lot sizes, I could have stacked my orders. Multiple retests. Could have entered down here on the low. I could have entered right here on the low. I could have entered right here on this retest of this reversal right here, because I noticed See, I ain't gonna lie, you guys, it's crazy. I'm like, you guys can really eat off this little strategy I figured out too. This buy to sell reversal. Like, you guys can eat off this little strategy right here. Bam, buy to sell reversal. Bam, continues up. What does it do? Retest. Continues to buy up. Bam, take profit. 52 pips. That's solid. You know what I'm saying? Let me see. Then this was really my entry though, right here. And then GJ just decided to, yeah, just go bad on me. But you know how it go. It'd be like that. Yeah. Instant profits. Feel me? So it's all about just breaking down the time frames, to be honest with you guys. Like, honestly, top down analysis is honestly what I do. I look at the market from really the monthly a little bit, not really all the time, just because I do like to sometimes, just because it gives you a direction in the market. Like this right here, I can clearly tell just from looking at it, it's giving me a W setup. And when you see W setups, you can normally expect the market to come from the high, go to the low, and end up reversing on a downtrend somewhere in this area right here. And remember, guys, this right here is my Fibonacci retracement tool. Let me make this a different color just for you guys too. So the market can come back and retrace somewhere in this zone and continue to push down in its downtrend to the 27, the 61, or the 161 retracement zone. So it's good to know that on the monthly, right? Just because that gives you projected areas of where you can either get into the market to continue to buy up into, and it gives you projected areas for where you need to look in to getting into sales, because the market can actually give you more signs of sellers getting into the market on a lower time frame. So what we'll do is drop time frames. Go to the weekly. And right here on the weekly, we see that, my bad, let me delete this. So on the weekly, we see that the market is creating what we like to call lower highs, lower lows, lower highs, lower lows. Well, technically, I'm gonna be honest with you guys. This right here would be technically called a higher low, just because proportionally, this low, this previous low to the left, is higher than this one. So this allows you to know that the market is going to continue to push up. And that's why the market does so, instead of it continuing its downtrend. You feel me? So that's something to look at too, because it did break formation, but it could be only for a quick minute. You know what I'm saying? So that's something we just look for. That's something I would like to pay attention to, and it's something you like to have marked off, because it can happen now, it can happen next month, it can happen, next week, but it's just something to have marked down for when the market can actually come down to that area, and they give you a projection of what can happen. So we notice that the market is continuing to push higher, it's creating higher highs, higher lows, higher highs and higher lows, and then higher highs. This right here is a bullish engulf. This candle right here lets you know that the market is going to continue to push up. This lets you know buyers are in play. This is a bullish market now. So what you look for is a nice retest of the low, or let's drop time frames. So what you would want is a nice retest of the low. But you know, like I told you guys, I got a little trick in the formula. If you notice right here, we have a zone, a little retest zone, that I like to, usually mark off. We don't see too much movement right there, but we do see another one right here. So I'm gonna mark these off. Now, this right here gives me a great sign of where the market likes to come to a lot. This is a median. This is a zone that the market comes down and respects a lot. It finds support and resistance, such as it finds support here, support here, support here, resistance, resistance, support, support, support. So, well, this is like this is an indecision. This is a indecision area. Excuse me, guys. So, right here, let me see. Come on, GJ. Oh yeah. So top-down analysis. So yeah, I would have came down, looked up here, and I would have noticed that okay, the market's still buying up, and I'd possibly be still looking for sales or buys. So you guys could have found you guys some good buys down here easily, strictly off this first zone right here. Drop down to the 4 hour. So first what we notice here is we don't see a bullish engulf at all. So how do we know that the buyer's in play? We don't see it on the 4 hour. We don't see it on the daily either. The 1 hour, we see it. Down here, we notice that the market has found a floor. The market has found a level of support. So what I do is I mark off the median. I mark off the wicks, the ones that are in the middle mainly that touch each one. And I usually go from where mainly like previous price first started your first started the support or resistance area. And I noticed that right here, this third candle is the smallest candle wick that actually is in the middle of everything and that touches everything. So I marked that off. So as I notice here, I noticed the market makes another reversal zone right here. And I wouldn't even, I'm be honest, just because I'm on this low time frame, I wouldn't even look at this, you guys, just because it's really in a consolidating trend. But it's just something to notice. And if you do notice, my bad, let me just mark this and show you guys. If you do notice that if you guys did have it marked off, that When the market does finally break above, it retests it. It breaks fully above, but on the lower time frame, it doesn't retest. It doesn't give a clear sign of retest. Up here, it does. Then it gives the perfect wick retest for you to get in strictly off this zone. But you would have to drop down to a lower time frame to see that. But I'm gonna show you how I got in on this lower time frame on the floor. Basically, because I didn't see any clear market structure here. It's just a lot of bouncing up. It's just a lot of movement, sideways movement. So I dropped time frames to the 30-minute. I extended mine, okay. I see a little bit more market structure. Let's see what the 15-minute shows me though. The 15-minute shows me a way more market structure. Shows me a little bit more of what I need to see. So what I need to see is on the 30-minute, let me mark off some key areas and some key zones. So I notice right here that the market doesn't give me a bullish engulf. So now this still shows me that it's still sellers in the play, but I do not see a bearish engulf either. So this doesn't show me that it's enough sellers in play yet. Over here, I noticed that I see a bearish engulf. This lets me know it's a lot of that sellers might be coming into play, but they have to push down and bust below. They don't break below this low. The market pushes back for a retest. It's a bullish engulf though, retest. But it gives us a nice rejection of the support area too. So since it gives us a nice rejection of the support area, it lets us know that the sellers aren't really aren't ready yet to bust down. So what I need to see to let me know that the sellers are ready to bust down, basically, if I know for the sellers are ready to break between the low, I need to see this. I need to see a clear retest of this low, and I need to just straight break down. But if you notice, the market doesn't do that. The market actually comes and creates another low. This is what we call a higher low. The reason why it becomes a higher low is because the buyers came into play and you had confluence. You had confirmation that buyers could take over. It actually supported, it came to a support level and gave you a clear bullish engulf. This isn't a resistance level. This is the resistance level up here. This market doesn't come give us a bearish engulf at this resistance level. So this isn't confirmation that the sellers are going to push up, you know? So what we see now is we see that the market starts to give us some bullish momentum, but the market does not actually break above yet. So I'm still not getting in this market yet. I'm gonna be honest with you guys. This is just a consolidating range. But if you guys like sniper entries and you guys really want a confirmed sniper entry for you to actually get in this market, this right here would basically be your entry. You would only have to deal with, let's just say you got in right here. Let's say you got in at the middle. You would have to deal with 28 pips drawdown. 28 pip drawdown, I'll take 28 pip drawdown to shoot up 173 pips in 8 hours. I'm taking that all day long. All day long. But you didn't have enough real buyer's confirmation to get into that market yet. What you needed was for the market to bust above this indecision zone right here, because this was the first resistance level. This could have been your resistance level too, right here. But for me, I would have made it this one up here, the green line. But let's weigh the options and let's see which one would have had the better risk to reward. So if we would have got in right here compared to getting into the market right here. Let's see the difference. Hold on. Oh man. Uh-oh. I think it lost me. I don't think they wanted me to show you guys that sauce, y'all. Let me see. Is this it? Oh man. Where's the sauce at, y'all? I think it was right here. Y'all remember? Oh man. What is that sauce at? Hold on, I'm about to find that. I can't go out like that, y'all. I gotta find that. I was about to show y'all some sauce. Well, I feel like they just deleted my sauce. Like no cap. I feel like trading you just deleted it. Let's see. I don't think that's working. Yeah, I don't think that's working. Yeah. Illuminati's working. They are working hard, man. Oh, that was some good sauce too. Let me see. I'm gonna find. I know I was in a consolidation zone. I just forget. I know I wasn't right here because I had two things marked off. Was this it, y'all? I don't know. I don't think this is it, but oh, this was it. Yeah, they deleted my markings, I think. Let me see. I don't know. That low-key just got me discouraged. That just really just got me discouraged. Wow, that's crazy. That's crazy. Let me see. Yeah, that's crazy. All right, for sure. I'm glad y'all was paying attention. I'm glad y'all was paying attention. Nah, but yeah. So that's mainly how I catch US GJ and US 30. Um, yeah, I know I was going on for damn near an hour, y'all. I'm about to wrap this up, you guys, honestly. Um, shoot, Andrew caught a great trade on gold too, you guys. I ain't gonna lie. So whoever got in gold, I hope y'all did get into that gold sale that Andrew caught. And honestly, if you notice, like this is kind of like Andrew's normal old strategy. If you just drag it from the high, to the low. And if you notice, the market comes back into your 61 to 71 zone, to your 8 zone, to get in it, and it shows you signs of, signs of basically it's seller's momentum. Your seller's momentum sign for you guys to get in, it surely was right here at that bearish engulf. So shout out Andrew. Are you ain't sell yet? Oh man, well I did. See you later. I'm already in. Shit. Hold on. Let me see. Yeah, I'm already 150 pips in profit. G. You late. You late. But yeah, you guys. I'm gonna wrap it up. All right, you guys. Y'all have a great night. Thanks, Andrew, for allowing me to get on this call again. And I really want to thank you guys for taking the time out to get on this call with me. I'm gonna drop my Instagram. If y'all would love to follow me, I'll follow back, and I'll definitely show love. So, you know, hope you guys have a great night and study, 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 back test, back test, back test. And back testing is what we just did. We basically went over the market. We basically tried to find entries in the market of how we can find. Basically, we went over the market and we went over it just to see if we could find entries, take profits without like just guessing it, not, actually just mapping it out on our own, and that's back testing. You guys do that and study that, I promise you guys, it's going to help you guys understand why the market's moving, which way it's moving. And remember, top-down analysis. Look at it from the higher time frame to the smaller time frame, because the smaller time frame lets you know what's really going on and why you got those big candles in the higher time frame. So if you guys need any help, definitely tap in with y'all mentors, reach out to them, study, study, study. Because the hours that you guys put in, the time that you guys put in, it shows. Simply, it shows in y'all testimonies and it shows in y'all chart work. Y'all got to start dropping chart work.